All right, everybody. Stocks by the numbers. Welcome back. Quick update here after hours on a company that I know a lot of people were watching and waiting for this earnings report to come out. We're looking at Supermicro Computer Incorporated, ticker symbol SMCI, listed here on the NASDAQ. Stock closed a touch below $617 a share, was green over 8 points, 1.33% on this little rebound day that the markets had going into these earnings. And we can see now we do have kind of a mixed report here, in my opinion. But it also, I have to say that the growth is definitely there and cannot be denied. But if the traders want to bring the stock down now, initially after this report, and potentially pull it back to a previous trend line, in my opinion, it would make sense. But I do still stand by my analysis and feel that long term, this stock should really grow nicely for everybody based on the growth in revenue that we're seeing. So 558 after hours, as you see right here, down 57 points now, about 9.25% here. If we look at the numbers, we can see big miss on the EPS side, which, in my opinion, I mean, expecting over $8 a share did seem a little excessive. The company comes out, reports 6.25, so they missed by $1.87 or roughly 23%. The revenue, though, in my opinion, I mean, this company was recently doing, 2 to 3 billion in revenue. Now we're up to the fives, and forecasting moving forward, high sixes, potentially 7 billion here for the next quarter. We'll get to that in a second, but we can see 5.308 billion on estimates of 5.316 billion, technically missing by about 8.3 million or 0.16%. And I have to say again, I appreciate the fact that it's dropping because technically it was a miss. But again, looking at where the company has come from, the increase in demand, market cap 36 billion, PE sitting here, we're trading 35 times earnings, and you can see that EPS was pretty solid and growing nicely, and now we had a little bit of a setback here for Q4, but look at this growth here quarterly. Look at this, just over the last couple of quarters. 1.2 billion up to 2, staying above 2, up to 3.6, up to almost 4. Now we come out over 5, and next quarter they're guiding for sales of 6 to 7 billion versus estimates of 5.5 billion. So we're potentially going to see a nice beat on the revenue side roughly 3 months from today. And EPS, we can pull up here looking for some guidance here. Sales rise, Q1 outlook issued, stock split approved. Also, I mentioned this in my last video. I mentioned that we had a pretty low float and the stock was pretty expensive in the high hundreds, potentially 1,000 plus. I know it ran up to $1,200 plus, and I said, in my opinion, that looking at the float, looking at the price of the stock, I said that I feel personally that a stock split was potentially on the horizon, and that's the news that we get today. But we can see again, 531 billion, brought in 2.18 billion a year ago. I'm technically slightly below those estimates, but we can see here non-GAAP net income 669 to 827 for next quarter, and net sales ranging 6 to 7 billion. Analysts expecting 758, so kind of the middle of that range, kind of towards the top end actually. And revenue, as you see, 5.45 billion, and they're forecasting potentially 6 to 7 billion next quarter. So slight miss this quarter with a potential big beat coming next quarter, which is why I say, in my opinion, again, sometimes you have to deal with this short-term volatility and look for that long-term growth. And I still stand by my analysis. Personally, I think that this stock was going to go well over 2,000 a share. Now, of course, we're doing a 10-for-1 stock split. So now we're going to go to $61 as opposed to $616. But I still say it should rally to over $200 now, which would be over $2,000 after the split. But fiscal year 25, company expects net sales of 26 to 30 billion. Analysts were expecting 23.24 billion. So right now, the company is forecasting roughly 10% more sales than what analysts were expecting for next year, now 2025. Company's board approves 10-for-1 forward stock split. Shares expected to start trading on a split adjusted basis on October 1st. So the split we knew was coming. The growth in revenue, in my opinion, absolutely phenomenal. Of course, everyone sees that they missed, so they're beating up the stock. But again, in my opinion, sometimes you have to take a step back. You have to look at the big picture. Obviously, if you stepped in and you played calls on SMCI going into these earnings, obviously you're probably going to take a loss. For you longer term shareholders out there, again, in my opinion, the growth is there. The revenue is climbing. They up these sales figures well above estimates. And if people want to be a little, excuse me, if people want to be a little weary talking about the EPS side, very understandable. But the growth in revenue is there. 10-for-1 stock split. In my opinion, this was actually a pretty good quarter, but you can see we spiked up above both of these support trend lines here. Now you can see we broke down below it, and if we pull out a 1-year chart, you can see after hours the stock is now here, right below this top trend line coming down that it was trying to hold and potentially trying to reclaim that one. And we can see that we rejected, and that's why if we slowly start to pull back, you can see, look, we're looking at the very high threes, potentially around $400 a share, kind of almost back to where that initial big spike came up. And I know that after seeing this big run and potentially getting in here at like 700, now you see the stock down at 500, I appreciate the fact that you could be pretty upset. But again, in my opinion, if you look at the long-term growth, if you look at the big picture, I would personally view this as an opportunity to start to maybe average down and lower your cost and accumulate shares and build a position for the longer term. But here in the short term, we can see starting to see, trying to see a little bit of life here and bounce off these bottoms. Now we're down only about 8%. Looks like it's trying to reclaim this trend line right here of about 590. Excuse me, my apologies. Trying to get back here to this trend line of about 590, might even come up here to about 597, try to retest this 20-day moving average. Because again, what I'm seeing here, as I mentioned, technically it was a miss. So I appreciate the fact it immediately comes down. But I'm telling you, with the beef up in guidance, the 26 to 30 billion in sales moving forward now next year, EPS kind of looking like it's in line. And again, next quarter, they're forecasting 6 to 7 billion. Analysts were expecting 5.5 billion. So this is why, again, they could kind of beat it up and drop it down a little bit, but also at the same time, you have to lift it up because, again, we always say that stocks are supposedly worth their future value, right? The growth of the future business. This is why I have to stand by my analysis, and I am still personally bullish on SMCI. For the record, I do not have a position in SMCI. $36 billion market cap now. It's obviously going to be a little bit lower tomorrow at the open if we stay here at these levels, but forecasting 26 to 30 billion in sales next year. Market cap, a touch over 30 billion. That's a joke, in my opinion. That's a joke. That's why I stand by my analysis, and a double, triple from these levels over the long term really shouldn't be an issue. But let's switch over to, let's switch over to stock charts quickly. I'll let you go. We can see the stock really got beaten up, got taken below that bottom Bollinger Band here on these sell-offs, came back up today, 1.33%, but the RSI basically sitting right around that benchmark. And if they happen to beat earnings, I think the traders would have jumped in, especially with the low RSI, and we would have brought this baby right back to this 50-day moving average of 805.85. But again, a little bit of a mixed return here for the earnings, so I appreciate why the stock is down a little bit right now after hours. The MACD was selling off and pulling back, but we saw again that a lot of these tech names and the markets overall as a whole were really raging and climbing to these heights, and we know what goes up must come down. So again, will a 20% correction happen over the next couple of months? Unfortunately, I don't know. Only time will tell. In my opinion, it should. And again, what I will say is, if this market does pull back and correct, in my opinion, you should make a hit list of companies like the SMCIs, companies that are growing nicely, having the revenue come in, right? They're forecasting better things for next quarter, for next year, right? Those companies that have the numbers to back up their growth, in my opinion, you make a watch list, you wait for them to sell off, pull back. Once they really get cheap, once they start to look fair valued, undervalued, markets potentially flattening out and now ready to rise, maybe going into elections, then we can potentially take a position in the stock and we can ride it out over the longer term, right? And we may turn around and see a stock down here at 450, 420 a share, and then we turn around 12 months from today and it's back up at 900 and change. And I understand all of these prices will be adjusted for the 10-for-1 stock split, but I'm sure you understand what I'm saying. So let's switch over to weekly real quick. I'll let you go. And the RSI was a touch below the middle of the road. It was over here at 42.5. Again, stock was just kind of channeling sideways along the mid-Bollinger Band, started dropping down, retesting this 50-day moving average here at about $598. And look, dinner's ready. I have kids screaming at me through the door. But we can see, look at these multiple green, white, solid candles, whatever color you use. And as we said, when we have these big run-ups, we kind of have these drop downs to potentially sometimes back to where we started, or it gives back, 70-80% of this gain. That's why I was saying, in my opinion, if it's not absolutely perfect across the board and markets pull back, we can potentially see sub 500 and see the stock drop into the 400s. But again, if you're a long-term holder, in my opinion, really not a big deal. If you stepped in, you bought SMCI calls, I'm sorry, this one apparently is dropping after hours, but RSI down here 42.5, and that's why I'm saying, in my opinion, on both the daily and the weekly here, the RSI does seem pretty low. So even if they do bring it down for a day or two, I think, in my opinion, it should bounce right away and potentially try to reclaim that 50-day moving average here, 598. It really should get back up to the mid to high 500s, in my opinion, after a quick little sell-off. But let's check the pivot points, actually, real quick. I'll let you go. And you can see 524. Stock right now, after hours, slowly starting to channel up. Could be potentially wedging here in the short term, and then it can break and maybe drop back down. Of course, only time will tell, but we're sitting here at 570 right now. So looking at the weekly, you can see we came down almost to this pivot point, 524.74. Stock hit 529.5 and then bounced. So we have to see if they do bring it down. This is the key level, in my opinion, to watch, about 5.25. If we switch over daily, we can see we have this support level 584, and technically the stock has rejected off of that level and is kind of staying down here at 570. So we are now technically below this, and you can see that the next support level, if we continue downward, is looking like about 466 3/4. So that's why I was saying, in my opinion, unless everything is perfect, if markets don't sell off, if the company beats on the top and bottom line, if they up guidance and next quarter revenue and everything across the board, stock split now, right? So that would potentially drive more volume into the stock. This is why I was saying we can potentially, if it's not perfect, we can potentially start pulling back to the 400s, give back some of these gains, bottom out, kind of quote unquote come back down to reality, and then bounce from there and look for more long-term growth. But also, I will say this, I've had a lot of people, a lot of smaller investors and traders in the Discord, in the comments section, saying that they like SMCI, but it's just very expensive, right? We know, we've all been there. If we're talking about an account with a couple of $100, a couple of $1,000, someone brings up a $600 stock, a $900 stock, it's probably something that you really can't take advantage of. And this is why I mentioned that, in my opinion, the potential stock split was coming, because the stock was very expensive. And again, we can see, look at the float here. We're talking about only 50 million shares. And this is why this increases the float, but also makes the stock more affordable for younger, newer, smaller traders and investors, right? So again, the split adjusted price isn't going to come into reality until October 1st, I believe it was. So you still have like a couple of months here. But in my opinion, if they do keep it down and if they do flatten it out, once that October split adjusted price hits and this stock goes to $56 instead of $560, in my opinion, a lot of new volume is going to come in, because younger investors and traders are going to say, okay, now I can actually accumulate a position. I could buy whatever, 50 shares, 200 shares, whatever you might be able to do. And I could buy this stock now at $50, $60 a share instead of $600 a share. And, this is one that I'm going to tuck away for the next 5 years, 7 years, 10 years, right? So a lot of people forget that too. By doing the stock split, whether you agree or disagree with this immediate move, kind of really doesn't matter, because again, the newer, younger, lower value account money is going to start coming into the stock. right? And I did want to wait. We're seeing some life here now, trying to reclaim this trend line, and that's why sometimes I do make these earnings videos later, because I know they have conference calls at like 5 p.m., 5:30, 6 o'clock, whatever it might be. So sometimes I like to wait for the conference call. So this news may be happening right now as we're speaking about it, but overall, again, it really doesn't matter. They talk about over analysis by paralysis. And I think, in my opinion, this is exactly that type of situation. Everyone's trying to, cross every T, dot every I, check every little scrap of data out there, and they're trying to see if this stock really should be up or it really should be down. But again, just going back the last couple of quarters, I mean, we went from $1 billion in change up to over $5 billion in change a quarter now, $6 to $7 billion potentially projected for next quarter, 26 to 30 billion projected for next year. And you can see, look, 5 billion for the year, 7 billion for the year, right? Now we're going to close out 24, and then 25 is going to be up to 26 to 30 billion. This is what I'm saying. This is why the long-term growth, in my opinion, cannot be denied. And you know what? If you're expecting a big market sell-off and you think this will drop down to, 420 instead of 580, so you want to wait a little bit, you want to let the traders hit it, you want to let the market sell off, or maybe you just want to wait for October and wait for the stock to split. Obviously, it's entirely your own prerogative. But at the end of the day, I think that we all can kind of see the writing on the wall. And I think the demand and the growth in SMCI is really starting to pick up. And I think it's going to be there. And obviously the company, again, forecasting big things moving forward for next year. So until until you wake up and you see they missed earnings 3, 4, 5 quarters in a row, and all of a sudden they're like behind that guidance, in my opinion, you really shouldn't have a red flag raised. And any big sell-off should potentially be viewed as an opportunity, in my opinion. But that's pretty much it. And I'm going to end it there. Let's see if we just missed anything. Split 10 for 1. Outlook for AI servers. Yeah, we had that initial pop again. Yeah, see, big EPS miss, and that's what I mean. See, people might, because of the run-up it had, people might just immediately be comparing this to NVIDIA. You know what I mean? And they might be looking at it saying, well, NVIDIA is growing nicely, and, they're profitable, they always beat earnings, and now you have SMCI, oh, they missed earnings, but, they're saying they got big things coming, like, I don't know, maybe we should bring it down, and then we'll potentially bring it back up. And that's what I mean. If you're in that trader's mentality, honestly, it may be very difficult to time a situation like SMCI. But overall, I do believe in SMCI's growth. And I was even remarking in the Discord a few moments ago that it always amazes me that looking at the demand and the growth and the increase in guidance that a stock like NVIDIA forecasts, and if you notice, every earnings report, the revenue, the EPS number is always a low ball, right? And NVIDIA is always able to beat these estimates by 10, 18, 22%. It's just amazing, right? And now on something like SMCI, they go completely top of the range, over $8 a share, 5,316 billion, and the company still pretty much comes close and almost in line on the revenue side, of course, with the EPS miss, but you understand what I'm saying. I feel like some companies get these low balls, some companies get these ultra high estimates, and then if they fail to deliver on those high estimates, everyone wants to act like they're not growing as well and they want to beat them up. Almost similar to something like a Fubo we saw, right? They want to beat it up. They lowered guidance, but then they reinstated guidance. Now they upped guidance. People want to talk about subscribers didn't grow enough, and now you see quarter over quarter we're growing year over year 20+%. Like, this is why I agree with the Buffett method when I say sometimes you got to ignore all this noise here that you're seeing and just look at the actual company, the actual business itself, to see if you're going to see some growth over time. And we can see that we basically came back up almost to this 20-day moving average, and now we're rejecting down and we're approaching the 550s, and now potentially going to break that support trend line. But I'll probably maybe do another update video tomorrow when we see how the stock is moving, and we can definitely check back in on SMCI later in the week. Give it a day or two to for Wall Street and traders to kind of digest these numbers, and then we'll see where we take it from there. But that's pretty much it. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain, and I want to wish all of you success. Hope everyone makes a couple of dollars. Thank you for your time. Have a good day.